You're looking for the perfect order block, or more generally, how to even identify order blocks. So today, we are going to go through everything you need to pay attention to so you can identify your order blocks perfectly. And maybe just briefly in advance, order blocks, supply and demand, support and resistance. In the end, it really doesn't matter how you define these areas or what you call them. What's important is simply to know, okay, the chart tends to return to these areas and we can trade from there. And if you enjoy videos like this, go ahead and leave a like and subscribe for free. But I'd say, let's get started right away. So let's go. That means we'll start here with the gold chart and I'll explain everything to you about order blocks using this example. In general, what do we need to quickly identify a typical order block? We need an aggressive move in one direction. We had that right here in this area. Along with that, we have an order block here. So let's quickly mark it on the chart. This is what it looks like. I'll just define this as an order block for now. So there we already have an order block. How did I draw it? Pretty simple. I just took the candle before it, plus the wick down here. So basically I'm taking this entire area. It doesn't always have to be exactly that one candle. In general, what's much more important is that we have this aggressive move in one direction. In addition, we need a fair value gap that's located right above here. You can see it here. It really has to be attached directly to the order block. So these two things already define a very, very good order block. These are important points that you should simply remember. So we've basically clarified that now. I've also made a detailed video about the fair value gap on my channel. Feel free to check it out again. But it's nothing more than the fact that with this candle, there was simply no wick formed on either the right or left side, right? So the candle down here didn't move all the way up and the next candle up here also didn't move down there. That means a small gap is created there, you could say. And in the end, that's nothing more than a fair value gap. And when the chart comes back down here, it often tends to go long from there. Now, many of you would say, but up here, we also basically have an order block because the price moved down aggressively from there as well. Yes, you're absolutely right about that. If we draw it in, there you go. That's our order block. That's also completely correct, or you could call it resistance or whatever term you prefer. Let's just call it an order block for now, but we can immediately spot the first mistake. If you were paying attention, you'll notice that the fair value gap is missing up here. So for me, this entire area is invalid. For me, it's not valid. It doesn't exist. So I completely remove it. No. So in this case, we don't need it. And what's even more important is that we not only need to identify the order block, but also the trend. The trend here is definitely an uptrend. So we should only be looking for long trades. That's why I only look for long trades here. So what else do we need to make this order block truly valid, to make it really, really good? For that, we actually need a break of structure, a structural break or a change of character. I've also explained that in my videos, but that's not really so relevant right now because just this combination of order block and fair value gap alone, these two things, just remember, these two things are enough to be able to trade profitably. That means we don't need to go too deep into the smart money concept right now. I've already made more than enough videos about that or covered it in our VIP group. We also do that regularly there and talk about it. I've also made a course about it and so on and so forth. But we are drifting a bit off topic. What's really important for you is fair value gap and order block. These two combined are what we really need along with this aggressive move in the long direction. If we have that in this combination, then it's truly a very, very good order block. That means let's take a look at another example now. Up here, for example, there's an aggressive move downward. So this is basically the first move we had to the downside. Aggressive move downward. On top of that, we have our order block up here. In general, you could also say, okay, I'll extend it all the way up to the highest high. That would now be our order block. In addition, we have a fair value gap here from up here, from this wick all the way down to here. So here you can see exactly the same principle again. Bang, bang, order block, fair value gap. Then the chart came back up here again. And you could have said, all right, from here, we'll enter our short trade, set the stop loss just above here, and then trade the whole thing downward. How far do we trade it down? That always depends on how you actually structure your strategy. Personally, I'm a fan of a 1-to-1 ratio, but of course you can also backtest the whole thing and say, no, you want to hold the trade much longer. In general, with setups like these, you can also trade towards liquidity. That simply means that you just target the next low down here, or if you're in a long trade, then it's the same thing up here that you aim for this area up here as your maximum take profit. So in general, as we just said, okay, we're in an uptrend. And that's why you can also see that if we let this trade run all the way down to the liquidity down there, it simply wouldn't reach all the way down, right? So up there, that's where the stop loss would have been hit. That means it doesn't make it all the way down here. That's the reason why you probably shouldn't let the whole thing run for too long, because it's simply going against the trend here. So that means I'll delete it again. So I wouldn't have taken the short trade here at all, because I would have said it's against the trend. But what else do we have here? We don't just have this order block, we also have another one down here. That means here you can see the whole thing in this area. Again, exactly the same principle. If we now zoom in a bit here and say we include the low down there, then we place our fair value gap above it, from there up to here. There we go, just like that. So fairway gap, then down here, this is our order block. So again, both elements are present. So we would now like to trade the whole thing from here. That means if we come back down here, we would like to continue trading long from this point. That would basically be the plan. Very simple, just an order block with a fair value gap. Of course, you can further improve the whole thing by trading it with even more, well, confirmations. But in general, the combination of order block and fair value gap is already more than enough for you to make profits with it. And now let's see how it would have worked out. Bang. The trade goes in down here, stop loss, as I said, just below here, and the take profit would be up here at the very top, as we just discussed. That means we would really let the trade run until then, and let's see what happened. Up there, it hit our take profit, so that's exactly how you can do it. That's what it looks like with the trend trade. And if you want to get started with trading now, and you still need a reliable broker, because we need one for successful trading, then I recommend Vantage to you here. You'll find the link in the video description, and you'll get an extra 50% on your first deposit. So it's definitely worth it. Low spreads, low fees. That means everything we need here for successful trading. And as I said, they've been around for 15 years already. I've been with them for 3 years. I'm super happy. Feel free to create an account. The link is in the video description. Now, to maybe go into a short example here, up here we have a great order block, right? So here in this area we have an order block, and right below it we also have a fair value gap. You can't quite see it. The fair value gap is actually much lower, so it's not up there exactly at that candle. That means the fair value gap would be right here in this area. That means here we also have to assume again, okay, if the fair value gap is there, then we need to extend our order block here as well. So we would actually have to make it this large here. And you can see, bam, here on the right side, that's also the reason why you should do it this way. Of course, that means you have a larger stop loss. That's clear. But in general, that's the reason why I like to do it this way and extend the order block as far, let's say, as it reaches the fair value gap here. If there is a fair value gap present, and as you can see on the right side, it would have worked out perfectly here. What other confirmation do we have here? The chart has completely dropped down here, so it went fully short. Down here, as you can see, it completely ignored this order block, just shot right through it completely. And then it formed a nice low here and calmly came back up, picking us up nicely in this area up here. That means from there, it would have been a great short trade again with the stop loss above. And you could have easily made a nice trade here. Again, 1-to-1, you know how it goes. At the end of the day, I really don't care even if you go for a 1-to-2. That's possible too. In general, you see how it all works when you hit the right points and the right order blocks. Then the whole thing can quickly move back down here to the liquidity area, in this zone. And it worked really well here again. That means you can really identify order blocks this easily. And then you can say, all right, I just need these 2 confirmations. And that's basically enough. So an order block with a fair value gap and an aggressive move in one direction. That's the minimum we need for a proper order block. And if you want to learn all of this even better and you're looking for a trading community, then feel free to join us in the VIP group. The link for that is in the video description. You'll also get a beginner's course here. So even if you're a complete beginner, you'll get a solid foundation here and can get started very nicely. Or you can choose the annual subscription right away and even get a smart money concept course included. It's your choice. Feel free to do so. We have over 100 members in the VIP group. Feel free to join us. The link is in the video description. And remember, if you want to start trading now, feel free to create an account with Vantage. As I said, 50% on your first deposit. The link for that is also in the video description. That means we are done for today. I hope you enjoyed the video so far. If so, then feel free to leave a like and a free subscription, and I'd say we'll see each other again in the next video. Until then, take care. Bye bye.